Security, scalability, and decentralization. These are three of the core ideas behind blockchain technology, but the challenge is that improving one often comes at the expense of another. As blockchain adoption grows, the need for systems that can scale without major trade-offs has become more important. So, new to the scene is Mainnet, a layer 1 blockchain that approaches this problem with a combination of unique solutions. So in this video, we'll break down what Mainnet is, how it works, and how it compares to other blockchains. Mainnet was founded in 2022 with one goal in mind: addressing speed and scalability limitations found in many existing blockchains. It's an independent layer 1 network that is fully compatible with the Ethereum virtual machine, also known as the EVM. So this means that applications that were built for Ethereum can also easily be deployed on Mainnet without having to rewrite code. For developers, this means existing Solidity smart contracts, tools, and wallets can carry over with minimal friction. So there's no need to learn a new programming language or rebuild applications from scratch. At the same time, Mainnet introduces technical changes that lets it process and finalize large numbers of transactions within seconds. For users, that means that the result is faster transactions, quick settlement, and relatively low fees even during periods of higher activity. So interest in Mainnet picked up in early 2025, largely driven by its testnet performance ahead of Mainnet. By October 2025, the testnet had processed more than 2.4 billion transactions. At peak usage, the network handled around 34 million transactions per day, and the ecosystem also grew really quick with more than 240 projects building on the network. And even during this time, average gas fees remained close to zero. Besides testnet activity, Mainnet also established several key infrastructure partnerships. These included native USDC support from Circle and access to Chainlink data feeds, data streams, and cross-chain interoperability tooling. Other integrations involved projects like Orderly Network, Layer 0, and PancakeSwap. So what is happening under the hood? Well, Mainnet's design focuses on removing bottlenecks that slow down most EVM-compatible blockchains. On traditional EVM chains, transactions are processed one at a time. This keeps execution simple, but it also limits how much work the network can do. So, to speed things up, Mainnet executes transactions in parallel while still structuring its blocks like Ethereum. So that means that transactions execute faster, but the final outcome looks like any other EVM blockchain. So as an example, think of an efficient coffee shop. One person takes your order, another brews coffee, and another adds milk or syrup. So that way, multiple orders are handled at the same time, but at different stages. Another key component is Mainnet BFT, the network's consensus mechanism. Mainnet BFT is designed to improve communication between validators and block leaders so that the network can agree on blocks more efficiently. So this means blocks can finalize in under a second. Mainnet also introduces asynchronous execution. With this approach, the network separates agreeing on transaction order from executing those transactions. So validators first agree on what comes next, and execution happens afterward without slowing down consensus. Imagine that you're at a restaurant. Orders are taken first, so the line keeps moving, and the kitchen prepares the food separately, but taking orders doesn't stop just because meals are still being cooked. And this design allows Mainnet to continue processing transactions without delaying block finalization. Now, the final mechanism is Mainnet DB, a custom-built database. Mainnet DB stores account balances, smart contracts, and transaction history. On many blockchains, database access becomes a bottleneck under heavy load. So Mainnet DB is built to reduce that friction. If a traditional blockchain database is like a single lane road, Mainnet DB is closer to a multi-lane highway. Now, Mainnet is entering an already competitive environment. There are several blockchains and layer 2 solutions focused on high throughput and low fees, including Solana, Sui, and Aptos. But where Mainnet differs is its decision to remain fully EVM compatible while still targeting high performance. Many high throughput chains move away from the EVM to gain speed, and the downside is that developers are forced to adopt new tools and rewrite applications. So Mainnet avoids that trade-off by keeping Ethereum compatibility intact. So this means Mainnet can tap into Ethereum's existing developer base, tools, and liquidity, and at the same time, it can still compete on metrics like block time, finality, and throughput thanks to its innovative mechanisms. So rather than replacing Ethereum, Mainnet is positioning itself as an alternative environment that behaves like Ethereum, but processes transactions more efficiently. Most of 2025 was focused on development and ecosystem growth, leading up to the Mainnet launch on November 24th, 2025. From launch day, users were able to interact with a live set of DeFi, trading, and consumer applications. They could check out token exploration tools, trading platforms, games, and prediction markets. Mainnet's native token, MON, also launched alongside Mainnet. At launch, MON had an initial total supply of 100 billion tokens with allocations for a token airdrop, ecosystem development, network treasury, and more. The token is structured to support long-term ecosystem development while also rewarding early users, builders, and liquidity providers. Since going live, Mainnet has recorded over 258 million in total value locked. The network has also received 86 million transactions with a highest daily peak of 859 transactions per second. The daily average by the end of 2025 was sitting somewhere around 20 transactions per second. Following a brief move up to 0.04 just 2 days after launch, MON's price has since returned to its launch level of 0.02. With Mainnet now live, the focus shifts towards expansion and, of course, long-term adoption. The Mainnet Foundation plans to roll out staking and validator onboarding, along with developer grants and builder incentive programs. And there's also initiatives focused on community education, global outreach, and partnerships across DeFi and infrastructure. And we might also be seeing more AI since the foundation introduced the Mainnet AI Blueprint. It's a program dedicated to supporting AI-related projects building within the ecosystem. But there is still a long road ahead.
Now is the time when we're, getting going, getting into race pace, trying to find like that peak pace. Everything that happened before was just prep.
Mainnet's biggest challenge is going to be proving itself to everyone in the long run. Its long-term performance and security have yet to be tested under sustained real-world demand. It's designed to scale, but how it performs in the real world is something that we'll see as more people start using it. And another challenge is maintaining developer and user engagement once early incentives begin to wear off, especially because competition is fierce from other already established chains. So Mainnet's continued success will depend on whether applications continue to attract users and generate consistent activity. Now, a broader question remains on how Ethereum will scale in the long run. Mainnet represents just one approach to that question, focused on Ethereum compatibility and execution efficiency. So let us know in the comments below what you think is in store for Mainnet's future. And if this breakdown helped you out, don't forget to like this video and subscribe for more. Bye.